Stavros Tousios for M4Markets. Today we're going to have a look at WTI and also silver. WTI is very near the Fibonacci golden pocket, as we call, or the golden ratio, at around 80 to 60. Silver is already not flirting, even actually has already topped the 61.8 Fibonacci. And what is going on here with oil is that we have had, of course, what we call an impulse to the upside and two corrections. That suggests now we do have one more leg to the upside, at least for now, until a potential correction provides a bit more clarity based on the depth of the correction, of course. Now, it looks like that 80 to 60, perhaps even 83.30 or so, it's kind of a magnet zone. So it would be ideal for prices to get there first and then start correcting, while at the same time we see some divergence between the RSI and prices. Of course, prices have not really crossed above the previous high to be considered as an actual peak over here, because we need to see that actually taking place first, and then we'd assume an actual divergence. Okay, and this divergence could potentially, because we're also on the 4-hour, get us up to the 61.8 and then start correcting. We are above the 50 Fibonacci, and not just bias remains to the upside above the 79, but also let's not forget that while we are above the 50, the next target is the 62 indeed, and above there, of course, it's the 79. When we're talking about Fibonacci terms, we are that is close to the 87 dollars per barrel. Now we are going to draw an actual channel over here in anticipation of this move, in this pullback after, of course, the move to the upside. And here's what we're going to do. In case we receive rejection on the way down, that would suggest that the trend will remain accelerated. But if we do fall back within this trend, the median line or the bottom might actually hold price as well. That would still consider holding the trend intact, but only if we lose the bottom line, then things are going to change. Of course, we're going to be following prices of oil closely. Now, when it comes to silver, we have actually crossed outside this ascending channel. We've crossed we've crossed above the 50 Fibonacci, and we have come and topped the 61.8. This is of the longer term trend, starting off the high of like, what was it, 30, okay? So look, we are at 62, and now supposedly that is going to provide a correction, right? While the Fibonacci resistance is a strong level, that doesn't necessarily always mean that we're going to get a reversal or a correction. We could continue higher up to perhaps the 25.80, 26.20, and then 27. But in Fibonacci terms, the next resistance is at 79%, which is the 27.50. Okay, here's the thing now. We are also seeing a divergence here. And for now, the reality is that this is an actual double divergence, because you've got one over here from here to here, and you've got one from here to here as well, right? So this is a double divergence, which means that there is increasing pressure for a potential correction, okay? At the same time, though, we need to look at the Fibonacci extension here and see where have we come. Look, we did the 78%. So the 100, which is the next, is around the 27, okay? But if we take into account the first leg that we saw over here, look, we've already come up to 1618. This suggests, if this is an impulse indeed for an actual breakout that is going to be successful in the end, that we might correct over here, perhaps come down to the 50. But as long as we remain above 50, there is potential for 26 and 27. From there, that 5-wave move potentially is going to provide us a pullback, bigger pullback, and further continuation to the upside. So there is potential to return back within this channel, but I think in the short term, it might hold. If we fall straight through in here, we will be joining the descending trend once again. So as long as we remain outside, this is critical for upside bias.